Now joining me to review market activities is Mr. Ambrose Omodion, Chief Research Officer, Investigator Consultant. Many thanks for joining us, Mr. Ambrose.
Thanks for having me.
Now we're seeing the activities in the market. We're seeing the bearish sentiments going. Is the equities market, the Nigerian NGX, mirroring the general global caution we've seen for equities outside of this country?
Actually, investor sentiment across the globe are almost the same. Now that we're already in August, August is a very dicey month in global, world in terms of investment. Seeing the market pulling back this week, for me, I'm not surprised. Also, don't forget that we're seeing a lot of missed data in terms of macro data, some of company earnings from matured market and down here to investors to react to this data. That's why we are seeing, for 4 days, the market was down. On Friday, we saw that the Dangote appreciation pushed the market up. But the good thing is that as we have seen inflation figure, investors are going to call portfolio reshuffling now as to speak now. That tells you that going to the week or in the future, we expect that people will do portfolio rebalancing. That will also help the market to rebound. For me, there's no cause for alarm in the market.
So no cause for alarm.
No.
The market is still on the road.
Yeah, actually, because it's not break down 64,000 mark. That's also in things you watch. If the market is above 64,000, I tell you that there's still strength. But once it crosses it down to around 63, 64, 62, we'll now say, okay, what is going on? But the market is still at what we call distribution level, not yet in a decline phase. For me, it's okay.
Okay, so we've seen the NGX this week also slamming penalties on 8 companies, FBN Holdings and 7 other quoted companies for failing to file their unaudited financial statements after the regulatory due date. This points to issues of corporate governance, doesn't it? Yeah, I agree with you, but these companies, I think the NSC have done the right thing because they all have a press liquid requirement that after we are listed, you have to feed the market with your performance so that investors in your company will have information to make a wise decision. On this note, finding them for me is a good one, but for NSC or NGS to quickly just find this company, whereas also the NGS itself, for me, they are not even preaching what they are teaching. They are not doing what they are preaching because, let me say so, if NSC is finding company for releasing list number, at times on NSC you can stay for 2 weeks, you are not seeing information regularly. That means I prefer that now they find them, let these companies sit up and we expect to see more of the companies keeping to their requirement. Also, don't forget that some companies that are in that list before this finding, some of them have quickly filed up stock like Presco and others have quickly represent their numbers to the exchange, which they've lifted up. But for these ones, let them pay the fine. But I think NSC should still lead by example, but also bringing out their data on time, especially the market information that we use to analyze the market. You see, a week we close, whether we see information from NSC, but finding this company, I think it's a good one, but they too should also sit up in their corporate governance. Yeah. Okay, so we're also seeing this. So are we saying that these companies, the fine that they're paying, is it that they're comfortable paying this fine and that's why they keep delaying it or not even filing it at all? Is it that the NGX should employ another strategy? No, for me, if the shareholders of this company should be held responsible. Your manager that you employ, because shareholders are the owner of the company, suppose that your earnings, like earnings salary is community result or late and now it will not be on shareholder because I tell you this fund, this penalty will affect the finance of the company. For me, I would tell shareholders that these people should pay the fine because ideally in a mature economy like US, this kind of thing, you have to find what the manager is from their salary you pay because I can't see why you delay your result. You are the manager to provide. Then shareholders should come and not just go there and praise the companies. This is the time they should ask company their managers question. Why will you allow this thing to pass the due date? Because as you are listing, you have all the presentation requirements. You know the period that at the end of the quarter, you have 30 days to release your result. At the end of the financial year, you have 90 days. And if you are going to half year and you are going to audit your account, you have 45 days to release it. For me, shareholders should hold them responsible. Interesting there. So we also saw something really tragic happening this week in Delta State. Seplat Energy's death-wise swamp drilling rig Majestic collapsed, and unfortunately, 1 person was reported dead and 3 others are missing. We thought this would affect the share price of Seplat. Market watchers were looking out for that, but nothing happened. Can you tell us why this is?
No, this is stock that for you to change the price, you need a lot of money because for an exchange to have a law that you must trade 100,000 units of shares to change the price. And this stock is selling for almost 1,600. That means you need a huge money to change the price, either up and down. That is why the price is still stable. But if you have to be normal free market where there is no regulation, like 100,000 units to change the price, I think the stock will have pulled back. But because you have that regulation that is supporting it, that is why it's still there. But for me,
this company has good potential, and despite we saw a little decline in their half-year result because of what the FS issue, it's a sector that, yes, we all want to be, because when you are involved in crude oil business, we know what crude oil price in the mature economy across the globe. For me, I believe that what happened is because of the regulation style of the market, because you must trade also unit to pull it up or down, and because, as I said, you need huge capital to trade that. That is why I bought. In terms of performance, there's no problem with Seplat.
So investors just go on as business as usual.
Because they didn't close shop.
Interesting. Now, a lot of things happened this week. I just want to run through them. It's kind of like this week was just like back-to-back of activities and things propping up. Especially, we also saw NMPC Limited also securing that $3 billion loan from Afrexim Bank to stabilize the FX market and also to stabilize the local currency, the Naira. Do you think this loan is favorable in the short term to fix these problems? For me,
I would say it's a local development in the immediate. For short term, this is not for short term. For short term, you need to plan for immediate environment where you are. And so this is what the CBN was supposed to do before now, or supposed to have done before now. Let's say why. Because before you float your currency, you would have sit down, know that there's a backlog of effort that's yet to be addressed. Then what you have done, if you want to borrow from World Bank or IMF, borrow to clear that off the backlog and now continue the new one. Now that you're afloat, you see how the market is so volatile. If not, the NFPs have come forward to rescue the federal government and CBN, and that is why I say it's a good development for me. There's no cost for allow. We can see that again. We have seen that another law is coming for another kind of initiative. Now they are calling back the ability to change again in the terms of effort to manage the FS market. It tells you that that's why the idea is good. To unify so that will stop this having those that are going to make out paying different, those that are importing, those that are friends to the president who are paying. It's a welcome development board. I think there's no proper planning or thinking before they went ahead. For me, it's a welcome development board. Now that we're seeing some little policy somersault, I believe that now that they're taking step for immediate solution now what is that what you call the ministers are coming on board to form executive council. I believe that it is time for them to have short-term, medium and long-term plan on how to make this market stable so that you can attract foreign investors and also save our companies that are importing the raw materials and machines to come up, because I tell you the exchange rate have affected a lot of companies. That means only the service sector are likely now they won't breathing, but for those manufacturers to bring in your machine, bring your raw material, you are paying from your nose. Also the leather is not available. But now that we are taking this move that yes, the British change should come back, and now you now set a range for them, a limit of 2.2. For me, it's a good development that we have started from the one you lift up the unification. That would have been the first thing you would have done there. If you're calling them back now, we'll not see price running from almost 700 to almost 950, 985 coming back. I think they are coming back now. That's why when you bring up policy, you study it. Now you can now make little adjustments. Now they are making adjustment. Now we have seen 3 billion from NMPC through National Bank. Now they're bringing another range or kind of a circle that for me is a good one for now. But let's see more plans or more strategy that they'll bring or policy that will drive it. But I know the first they should do that for you to attract foreign investors into this country, our exchange market should be stable, and we can now focus that in the next 1 year, next 2 years, the between the dollar and naira will be between this range of 2.5 to 2. That would be okay for us. It's a good one.
Let's talk about the immediate impact this $3 billion and the bringing back of the Bureau de Change has done, and the FX intervention in the market did to the dollar and the naira. Could you just tell us what we saw? Actually, speculators did lose in the market.
Exactly. Yeah. Don't forget that when you were interviewing the Minister of Finance, exactly now, they are giving a purpose. He said those that are holding FS are going to regret, because they thought that it's going to 1,500, 1,000, that the real value of our currency or naira is around the 700. That's what he said. You can see that immediately they just brought the $3 billion. You can see that that's the market at Black Bank full price pullback. Tells you that if you can sustain this and withstand stability, we'll go back to 700 and 750. That will also be better for people that if it's moving to 800, 900, 1,000, it's already affecting your plan. But if it's stable, you can forecast and do your business. But also, one thing to make clear that let us the government know that this is not a dollar economy. I understand that Nigeria is not a dollar economy. We use naira. Why is that? Even the man on the street wants to tell you the dollar is up, because everybody is taking dollar as benchmark now. That means we should encourage backward integration and also make sure that our naira has value, so that people looking away from dollar and spend naira, because it's like everybody in Nigeria is spending dollar, which is not good for economy.
That's very interesting, and we're going to keep talking about that. But right now, we're going to take a break. Our capital market continues just right after this break. Do stay tuned. Welcome back. If you just joined us, this is Capital Market Live from Channels Television, and we're reviewing key market events and how they affect your investment portfolio. Mr. Ambrose Obodion, Chief Research Officer, Invest Data Consulting, is still in the studio with us. Mr. Ambrose, in the face of the ongoing economic reforms and the changing trading environment, what advice do you give to investors? How should investors, or what should they do next to be able to profit from this market?
Actually, the first thing is that as an investor or a trader, you have your investment objective while you're in the market. Now, that objective will help you to have your trade plans. That trade plans also help you kind of stock will buy into your portfolio. Already, if you are in some stocks that, as we are seeing, they have fair result, because half year result is as important as almost a third quarter and also full year result. As the results are coming now, also what is happening in the macroeconomic space, we are seeing that the fundamental of the economy is changing, and at the same time, I believe that investors are looking at these changes in the economy because you want to look at mirror what is happening really in the economy now before you take a decision. We have seen that numbers have shown that with the new FS policy, some industry or sector in the market have been affected. We see them putting a red figure as a result of that. And some sectors are putting a very impressive and surprising number also. What you do, you don't have to represent your portfolio as an investor. Know the company that now you have seen the result. If you are in those portfolio that in those companies that are putting negative results, yes, market are responded, their prices are declined. Now look at the sectors where there is potential for them to grow their earnings power. Then you now start investing, because we have seen the half-year result of this company. You can easily forecast their full year, what they're likely to come as well as dividend. And also because prices have gone up, the dividend yield of these companies are gone low. Then it means that companies that want to pay higher dividend must also earn what? More. I mean, those companies, we see that in their top line and second line, bottom line, we have seen impressive performance. That is where you be keen as a result of what ahead, because every investment against the future. Now, we call it a service sector. If you look at the banking sector, insurance sector, and also this aviation service sector, and also the non-financial sector like UCAP and consider an allied investment, it tells you that these are companies that want to take the result. We saw that from the insurance company, because of the new rule that came from the regulator that increased the premium by 200%, it's already reflecting on the bottom line and top line of this insurance company, and their prices are low. And if you look at last year, so we saw that most of these insurance companies pay dividend, that's why they are still bookable. But now you are seeing what will drive the earnings of this company that will push their earning power is this premium. Don't forget that before people are paying just 5,000 naira for third party, now you are paying 15,000 naira. Also, it has been extended to other fleet of transport business. That means most of this company, insurance company that has a composite insurance, are making good money. That means at the end of the day, we want to see a better payout, because it has shown their first quarter, second quarter. And I tell you anywhere that when you see a company earnings trending up, it's a sign that trending up will support the price to go up. And also that will support what they pay out at the end of the day. This is how investors should invest now. Those companies that you're going to keen, look at their P ratio before you start buying them. And those companies that have seen that, yes, they put a negative number, until government is able to solve this FS problem, they'll still be struggling. You sell off your position there, move to where you see that is possible, because I tell you, in any market in the world, even when there is uncertainty in the market, there are sectors and industries that provide opportunity. No market will go down because there's uncertainty in the industry will benefit from what is happening. That is how to mirror your investment. Move to that sector for now. When you see that the other sector are improving, you come back and that is why you must do what we call sector rotation, to move to one sector to the other, looking for what opportunity to make money. That is why you are in the market.
You know that investors do not trade in isolation. There are factors they have to consider. So how should fiscal and monetary policies, decisions influence market players or influence the decisions in the market?
No, actually, anywhere in the world, once there's hike in interest rate, it's going to affect flow of funds. Why flow of funds? I say that because fund will now look at where you make more return with less risk. Now, here now we'll move our interest rate with the MPR from 18.5 to 18.75, 15 basic points. Automatically, it tells you that
about 25 basis points.
No, yeah, it tells you that the fiscal market will gain from it. What happened that immediately after that, the next Wednesday, we saw that a movement from almost 6.5 in Treasury bill 364 days to almost 12.15. Market started reacting to it, and funds started leaving the capital market to physical market, because now the yield is up, and there are some companies in the capital market will not give you 10% yield dividend yield, but we are getting almost 12.15 yield. Fund left the market for the board. The next last option now, we saw there was a decline too. And since that decline, because the funds also are coming back to capital, that means fund is being driven by what? By interest rate. That is why in any economy, there are three basic things you look at to know what to invest. Look at what is inflation doing, what is interest rate, and also what the economy, the what we call industrial output or national output, the GDP. If the GDP is going up, interest rate is going up, and you see that inflation is coming down. Tell you that we're already at what we call the end of the expansion. But if we are seeing a low interest rate, a low inflation, and we are seeing improved output that we're already at the late expansion, that will take us to middle expansion. But when we see that inflation is high, as seen in Nigeria today, interest is high, and we're seeing that even our national output is declining, tell that we're already in contraction. That's why these common ministers and executives need to think that already that economy that's contracting is not expanding. Despite that our GDP is still positive, but it's not we're not growing our GDP. That's why investors look at all these, and those companies those sectors that supported growth in GDP is also where you should be looking at. Because in GDP, we saw that the management sector, financial sector, telecom contributed positively. That means as an investor, that also guide you that this is where you should put in your money at this time. All this data comes to open your eyes where you should put your money. As inflation is moving money around, also the GDP that comes there, which sectors supported GDP, that means which sectors are doing well, you start keen to that sector at the same time.
So if earnings count in any market cycle, so what should investors be doing with the half-year corporate earnings scorecard?
For me, this is a good question. For me, look at the company that has good earnings. Look at the earnings as we speak now. Do a focus of 2 quarters. Already we have seen the half year ended June. Now you can see that we have another 2 months ahead to end the year. Already we are more than half of the third quarter already. We know what they've done. You can forecast the full year. Start buying. That's why I said earnings speak, as you just said, in any market, either in a down market or up market, because this is what price feed on immediately. Apart from the liquidity in the market, which is general, or the policies affecting in the sectors positively or negatively, the company performance is very, very key. If a company has 20% influence on the price, now that we are seeing that they are doing well, it's time for you to realign your portfolio in that direction that companies are performing well ahead of the end of the year. But now we're saying that we're expecting to see the first year banks, which for me is a catalyst also for the market. If it comes, because if I look at the results for other banks that have released before now, I see that all of them have recorded what we call exchange gain. That exchange gain is going to happen on these first year banks. And if that happens, we expect that the first year bank will know their payout pattern before now. But if the kind of earnings we saw other banks posted in terms of performance, profit, we expect them to grow their payout. If they kind of deviate from that, it will be a slowdown for the market. But if, like, let's for example now, for like GT Code that pay 30 kobo, move to 40 kobo, Zenith Bank that pay for 30 kobo, move to 40 kobo, assets move from 20 kobo to 40 kobo or 50 kobo, that will change the psychology of the market. Remember that anywhere in the world, the financial sector that drives the economy, because that is the engine of any economy. When these results come, will change the face of the market.
So interesting. So what are your stock picks for the week? I'm sure everybody wants to know where they should put their money, where they should be, what corporate earnings they should be looking at, and where they should be putting their money. So what
I said that
trade or fade this week?
What I said earlier is that it's time for them to realign the to what service sector, that where we've seen positive number. That means those maturing sector like Cabri, all those that have seen negative number, but it's going to remain until you're able to solve the FS problem. Move your portfolio to stock like GT Code, Zenith Bank, NACO, Massad Insurance. All these are stock that, because the sector, that they have something that is going to drive their earnings power. For that is where it should be.
Thank you so much, Mr. Ambrose. So right now, we're just investors out there. Just take it to the market and say, oh, I want to invest in the market.
Yes.
And we're going to struggle for a long time despite the FX issues.
Exactly, yeah.
So thank you so much, Mr. Ambrose Omodion, Chief Research Officer, Invest Data Consulting. Many thanks for your time.
Thanks for having me.